Today's executive buyers expect you to be prepared for the conversation from the beginning. Hi, and welcome to Part 2 in my series on assessing a client's financial performance and why this approach is core to successful, insight-led selling. In Part 1, I presented a framework for assessing financial performance. Here is a quick recap from Part 1. Some of the benefits of knowing your client's financial performance include: it helps to build trust with client executives. You can better show the benefits of your solutions. It often helps identify additional opportunities. And let us not forget, it separates you from the competition, since many sellers do not take the time or do not know how to assess their client's financial performance. In this episode, we explore a real-world case study focusing on one of the biggest drivers of financial performance: revenue growth. It is one of the most important areas of performance focused on by client executives. I will also show you how to use your revenue growth insights with client executives. In other episodes of Assess a Client's Financial Performance, we will explore the other key drivers of financial performance: profitability and asset utilization. This is more than a simple theory. I am sharing real-world and battle-tested skills based on my decades of experience collaborating with executives from companies in the Fortune 500 and thousands of enterprise sellers around the world, not to mention my former professorship of finance. I am not trying to impress you, but I just wanted to let you know you are in good hands. I talked about this in an earlier episode. You do not need to be an MBA in finance or be a financial expert to assess and use a client's financial performance. You only need to hone your skills for the one or two areas of financial performance your solutions help improve. Executive clients do not want a financial history lesson. They already know how they are performing. What they want to know from you is how your solutions add value. Okay, let's get started. Let's have some fun with finance. Revenue growth is how fast or slow a company is growing its top line. It is the percentage change in revenue over a set period, such as year over year or quarter over quarter. I am sure if you are in sales, you can identify with this. Revenue growth plays a crucial role in how investors value a company. This is one reason your CFO and CRO are always pushing you to close more deals faster. Let's now discuss the framework for how to think about your solution and its impact on financial performance. I call this the double-click framework. The double-click framework maps your solutions and areas of financial performance, such as revenue growth, the business functions that help manage that area, and those functions' measures of success, or what we also call their key performance indicators. The framework helps you create business-focused value statements about how your solutions deliver value. Here's an example for revenue growth. In this example, you sell customer insight solutions. First, identify the business functions or stakeholders who are potential buyers for your solutions. These include functions like sales, marketing, and product development. Next, think about how your solutions help improve the KPIs by which these business functions measure success. Sales, for example, wants to know how your solutions will help with customer retention, churn, and new customer acquisitions. Marketing is interested in KPIs like campaign response rate and return on marketing investment, whereas product development cares about the solution's impact on time to market, product success rate, and time to profitability. For each of the KPIs your solutions help better manage, you will create a value proposition explaining how your solutions help. This double-click framework also helps you think like a business executive who also assess their company's financial performance. For example, how marketing assesses revenue growth differs from how sales and product development are thinking about it. They think about revenue growth in the context of their KPIs. You need to do the same. Okay, time to start assessing a company's financial performance. Whenever I assess financial performance, I start with revenue growth since this is an area of focus for most executives and investors. Think about listening to an earnings call. After all the legal disclaimer, the talk moves to revenue growth. We will use the consumer products company that was used in the goals and strategies and executive compensation episodes. Remember, the company's goal is to grow annual revenue by 3 to 5%. Let's dive into revenue growth. I will explore profitability in another episode of the Assess a Client's Financial Performance series. The revenue growth chart shows that its 5-year average of 4.6% is at the upper end of its goal of 3 to 5% and is higher than its peers. That is good. Also notice that its most recent year's growth is much higher than historical performance. Your initial reaction might be they are doing great. The management discussion and analysis, or what we call the MD&A, provides valuable insights into the jump in revenue growth for the last fiscal year. I strongly encourage you to always review the MD&A as it makes you think more like a client executive and often provides insights into areas of opportunities. And you guessed it, it separates you from the competition since most sellers do not review the MD&A. It takes a little bit more time but is well worth it. It also helps build credibility. Instead of asking an executive a question such as, "I see your revenue growth jumped last year. What happened?" You already know the answers. I work with a lot of client executives, and a typical response to this question would be something like, "We talked about this in our MD&A. I suggest you go read it." Note that for companies domiciled in the United States, the MD&A is item 7 in the annual report. Outside the United States, the equivalent to the MD&A goes by a variety of other names such as management commentary, management report, and operating financial review. In the MD&A, management states, revenue was up 8.5% due to net selling price increases of 10%, partially offset by volume declines of 0.5% and negative foreign exchange of 1%. Note that volume fell 0.5%, which is never good. Most of the growth came from price increases. I doubt 10% price increases are sustainable. Suppose you provide offerings that can help volume growth, such as customer insights, sales automation, sales enablement, and faster time to market. Here is how you could use this in a conversation with Judy, who is a marketing executive. Remember, marketing views revenue growth in the context of KPIs like campaign response rate and number of campaigns. Here we go. Judy, in prepping for our meeting, I found that a company goal was to grow revenue in the range of 3 to 5%. I saw that last year's growth was substantially higher than this. In the annual report, management shared that most of the growth was due to price increases and that volume was actually down. Can you share with me what marketing initiatives you are pursuing to boost volume growth? Judy, thanks for sharing. Now, I would like to share with you how our solutions have helped companies like yours to increase volume by improving campaign response rates and increasing the number of campaigns. Judy, would you like to learn more? I am sure Judy would like to learn more about your solutions. Notice in the conversation with Judy, I did not make references to specific numbers. I just made references to trends and relative performance. In my experience, most client executives do not need to be referenced to specific numbers. Keeping it at a high level, using your financial insights to build credibility, and telling the story about your solutions can help. Let us summarize what you have learned in this episode. Client executives expect you to know their financial performance. Some of the benefits include, it helps to build trust with client executives. You can better show the benefits of your solutions, and it very often helps identify additional opportunities. In assessing a client's financial performance, start by reviewing revenue growth. These are your calls to action. Use the financial drivers map to identify the one area of financial performance where your solutions have the greatest impact. You can download the slide using the link in this video's description. Identify one business function, helping to manage that area of financial performance. What are the business function operational KPIs? Create value statements about how your solutions have helped other companies improve performance. Another call to action is to download my Amazon bestseller, Insight-Led Selling. Use the link in our bio. I hope you have learned something new that will help you sell to client executives. In other episodes, we'll explore the individual components of profitability and asset utilization. Happy selling!